$200 billion.
And the stock went down.
I'm Milo.
I'm Mila.
This is AI Daily.
In a few minutes, we'll talk about the $40 million one AI company is spending, not on chips, but on changing the law.
Let's start with the bigger number, though. In its second quarter earnings report, Alphabet, Google's parent company, revised its projected capital expenditures. The new forecast is over $200 billion.
That's the money spent on physical things, data centers, custom chips, servers, the entire foundation of their AI ambitions. And for a moment, Wall Street did not like it. The stock dropped more than 4% in after-hours trading before recovering.
Right, because that number signals just how expensive this arms race is getting. We're not just talking about research salaries anymore. This is the cost of building the factories. $200 billion is more than the entire market cap of most publicly traded companies.
It's a number that reframes the competitive landscape. If this is the table stakes to compete at the frontier of AI, how many players can actually afford a seat?
It also puts the pressure on Google's own hardware. A significant portion of that spending will be on their custom tensor processing units, or TPUs. They're betting that designing their own silicon will give them a long-term cost and performance advantage.
A $200 billion bet. The open question is whether that spending translates into market-leading models, or if it's just the cost of keeping pace. And speaking of the cost of keeping pace, Anthropic and AMD just made a major move. They announced a deal on Wednesday that has two parts, chips and investment.
Let's start with the chips. Anthropic is planning to buy AMD's Instinct MI450 chips, with delivery starting in the first half of 2027. This is a direct challenge to Nvidia's dominance in the AI hardware space. Having a major lab like Anthropic commit to AMD for its future buildouts is a significant vote of confidence.
And it's not just a standard customer relationship. The second part of the deal is a planned investment by AMD of as much as $5 billion into Anthropic. That investment is contingent on Anthropic hitting certain deployment targets with AMD's hardware.
Which is a very tight loop. AMD gives Anthropic capital, Anthropic uses that capital to buy AMD's chips. It aligns their incentives perfectly. AMD needs to prove its hardware can power a frontier AI lab at scale, and Anthropic needs a secure supply of GPUs that aren't from the market leader, plus the capital to afford them.
It connects back to that Google number. You can't compete without a massive supply of chips. This deal shows one way to secure that supply chain. Turn your biggest supplier into one of your biggest investors.
Now for that other number we teased. Anthropic also announced it's doubling its financial commitment for the US midterm elections, bringing its total spend to $40 million.
And to be clear, this isn't for compute. This money is going to an organization called Public First, which is advocating for government-enforced regulation on advanced AI models.
$40 million is a significant amount of money in policy advocacy. It puts an AI lab in the same league as some major political spenders. What specific regulations are they pushing for?
The stated goals are centered around greater transparency about risks and what they call protections on the development of advanced models. The core idea is that the government should play a role in setting safety standards for AI.
The causal chain is short. To ensure safety, you influence the system that defines the rules for safety. It's a direct approach.
It is, and it raises a fundamental question about the industry. Is the goal to build safe AI within the existing rules, or is the goal to spend money to help write new rules you believe are safer and that you are also uniquely positioned to comply with?
It's the difference between playing the game and designing the game.
Also in AI today, the US Treasury Secretary said the administration will begin examining open-source AI models from China for signs of intellectual property theft.
The statement included a threat of sanctions against Chinese AI companies if theft is established, opening a new front in the tech competition between the two countries.
A reminder that the hardware and the models are all part of a much larger geopolitical picture.
$200 billion to build the infrastructure.
And $40 million to shape the laws that govern it. The question is, which investment has the higher return?
I'm Milo.
I'm Mila.
And this has been AI Daily.